Hi, I am Anna. I come from www.ntvforex.com. The Fed message will be dovish, but will it be strong enough to push US yields even further down? Analysis.http ntvforex.com News ID 7399CA 7/29/2026 52:56 AM. Markets. Global trading was captured in a lackluster, defensive trading dynamics yesterday. Investors saw growing risks that the spreading of corona might arrest the reopening of the economy, even as echo data referring to the recent past printed mostly positive. Still, markets fear that they were mainly backward-looking rather than forward-looking. European equities closed with a small loss. U.S. Consumer Confidence Conference Board declined more than expected, 92.6 from 98.3, with expectations deteriorating. At the start of its two-day policy meeting, the Fed extended 7 emergency lending programs to December 31. It had little impact on sentiment. A late session decline caused U.S. indices to close with substantial losses. S&P 0.65%, Nasdaq 1.27%. After an uptick Monday, the U.S. yield curve resumed its bull flattening trend. 2Y yields declined 1.3 bp. The 30Y yield lost 4.3 bp. A 7-year auction attracted solid investor interest. The US 10Y real yield is testing the all-time low levels near 0.93%, indicating that the market is preparing for going financial compression as they look forward to today's Fed decision. The stalemate in the negotiations on a new U.S. economic stimulus package is pressuring U.S. yields, too. German yields declined about 2 bp. On the FX market, the dollar decline took a breather, but there was no meaningful USD rebound. EUR/USD finished the day at 1.1716. The TW$DXY ended the session near 93.70. USD/JPY was a slight exception to the rule as the pair declined further to close at 105.09. Sterling rebounded with EUR/GBP closing at 0.9060. This morning, Asian equities are trading mixed, with China outperforming and Japan underperforming, as investors look forward to the Fed policy decision. USD/CNY is holding near the 7.00 pivot. EUR/USD is holding well north of 1.17, currency 1.1730. USD/JPY remains under moderate pressure and is testing the 105 level. Later today, there are only second-tier data in Europe. Germany will sell 3.5 billion of 2035 government bonds. In the US, the U.S. goods trade balance deficit is expected to stabilize near a high $75 billion in June. However, even a substantial data surprise probably won't move markets just hours before the Fed policy announcement. The Fed is largely expected to keep the target range for the Fed fund rate at 0.0% to 0.25%. After taking measures to restore market functioning and to provide emergence support to the economy, the next step for the Fed is to give the market a framework for its policy support going forward. That can come in September when the Fed has new economic projections available. Even so, Powell will probably acknowledge the risk of the flare-up of the coronavirus weighing on the economy and commit further support as necessary. The Fed message will be dovish, but will it be strong enough to push U.S. yields and especially real yields even further down? The 0.54% area for the 10Y is a solid key support. A break would be highly significant from a technical point of view. The decline in U.S. real yields was also an important driver behind recent decline of the USD dollar and behind the rise in the likes of gold. As we don't expect a sustained reversal of this trend in real U.S. yields, the dollar will probably stay in the defensive. EUR 1.1822 US dollars 62% retracement since February 2018 top is the next important reference on the charts. Also keep a closer eye at the USD/JPY price action. The yen apparently is regaining some of its safe haven status and USD/JPY might take the lead in a next USD down leg. More uncertainty on the US fiscal package might weigh on the USD, too. In the UK, the June monetary data will be published. We expect more EUR GBP technical trading near the 0.91 pivot. News headlines. Rating agency Fitch lowered the outlook on its Japan credit rating from stable to negative. The agency mentioned the sharp economic contraction due to the coronavirus and the rising public debt. Fitch expects the economy to contract 5.0% this year. The rating agency maintained its A rating for the country. Inflation in Australia declined sharply in the second quarter by 1.9% QQ to be down 0.3% YY. However, the decline was triggered by some exceptional factors including a sharp decline in energy prices and prices of childcare. Trimmed mean inflation eased a more moderate 0.1% QQ to come out at 1.2% YY. Download the full Sunrise Market Commentary. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.